Now let's turn to banking, and job cuts have topped 77,000 this year alone. It's the biggest round of job cuts in 4 years as the industry slashes costs to weather a slowing economy and adapt to digital technology. Well, the majority of jobs being slashed are here in Europe. The region accounts for almost 82% of the total, and Deutsche Bank has been hit the hardest. Now, for more, Bloomberg's Nicholas Comfort joins us. Nick, first, great story, or a very well-written story about job losses in the banking industry that hit the Bloomberg terminal on our website today. Where are most of these jobs actually gone? So Morgan Stanley, 1,500 this year. Is it Europe or the US?
It's definitely Europe, and that's really reflective of the fact that the operating environment the European banks face, but also the fact that they haven't done their homework compared to many global banks. So, let's look at the environment. Negative interest rates, for longer than the banks had expected at the beginning of this year. Clearly, that's going to hurt. If you think that your loan book's going to be more profitable, if you had hoped it would be more profitable, then you have to reassess. Then there's also the fact that Europe is so dependent on exports. International trade disputes don't help on that front. And then, it's a question of homework. European banks have not embraced the digital revolution as much as US banks in prior years, and they're catching up, and now they're realizing that also large parts of their workforce are not what they need to be competitive in the years ahead.
So, Nick, is this, I don't know if it's, automation or if it's quants or if this robots in the banking sector, but do we have any idea of how many jobs will be lost in the next decade in banking?
Well, the cuts announced this year will actually play out over several years. So obviously, especially in Europe, there are some rather restrictive labor markets which offer protection to workers. And so that means you can't go out and fire people from one day to the next, that you have to discuss with labor unions and then use sort of early retirement options. There are various methods there. And so this is something which we'll see probably play out, this year through the next 3, maybe even 4 years, depending on the bank. Beyond that, there are sort of large numbers out there from consultants who talk about automation and robots replacing large swathes of the banking workforce. For every job lost, there are maybe not as many jobs created, but obviously we still will need humans. We will need people to go and do banking services, especially on the more complicated stuff. But I'd say, retraining and adapting to the digital revolution is probably one way that many people in the banking industry will continue to find work.
Nick, if you look at the breakdown, so Deutsche Bank planned to get rid of about 18,000 employees through 2022. Mm-hmm. How much will consolidation change the European landscape, and actually what does that mean for jobs in that industry?
Well, if we do see consolidation between big banks, it's still a big if, because the banks complain about the regulation not being favorable to that, and the regulators complain about the banks not actually having the courage to move ahead with plans. But if we do see consolidation, then yes, inevitably you would also have, tens of thousands of jobs going at banks across the continent, because the allure of consolidation is sort of you increase your revenue base and then you take out a whole bunch of costs, and in banking, costs generally IT and people, and so you could do the same amount of revenue with one set of IT, and you could also remove a lot of the people working in those institutions, whether they be back office or front office. There would be overlap which they would seek to eliminate. And if these big mergers which we talk about, which we've heard about, if they do actually happen, then yes, you'd expect that this trend to accelerate.